Hi everyone, thanks for joining us. My name is Chris Ashton. The title for today's webinar is Bitcoin Trading, Why the Market Still Holds Potential in 2025. I should say, while mainly discussing Bitcoin today, I will also touch on some of the popular altcoin CFDs available to trade on the Plus500 platform as well. Now, whether you're new to trading crypto CFDs or already have some experience, this session is designed to provide you with some actionable insights for the year ahead. Before we dive in, just a few housekeeping points. The webinar will last approximately 20 minutes long. There will be a Q&A session at the end, so feel free to add your questions to the Zoom chat or Q&A that you have access to. And please note that trading crypto CFDs involves risk, and this session is for educational purposes only. It is not financial advice. So here's a quick overview of the structure for today's webinar. First, I'll cover the basics every trader should know about Bitcoin and the altcoins XRP and Solana. Next, I'll use the Plus500 charts to recap the movements in Bitcoin, XRP and Solana's price in 2024. And then I'll discuss some of the driving factors behind these moves. The last section of the webinar is focused on looking forward into 2025. Here I will outline some of the factors that may influence the direction of Bitcoin in the year ahead, and then I'll move back to the Plus500 charts to provide a technical outlook for Bitcoin as we move into February by highlighting some of the technical tools available to you on the Plus500 system that can be helpful when trading crypto CFDs. Okay, let's move on. So, Bitcoin, XRP and Solana are all cryptocurrencies. Like a traditional currency, such as the dollar or euro, a cryptocurrency is a digital asset, but it's designed to work as a medium of exchange. However, unlike traditional currencies, they operate through a decentralized network based on blockchain technology. The decentralized part means these cryptocurrencies are not controlled by any central authority like a government or bank, such as the Federal Reserve or European Central Bank. And the blockchain part refers to a secure, transparent and tamper-proof ledger that verifies all of the transactions for that cryptocurrency. Now, Bitcoin is the original and most well-known cryptocurrency. As you can see from the table on screen, it is the largest in terms of market capitalization, well ahead of Ethereum in second place, XRP in third place, and Solana in fifth place. Bitcoin has a limited supply of 21 million coins, of which close to 20 million are currently in circulation. This limited supply has led to it being described as digital gold and a potential store of value. Although I should say at this point, while gold has proved itself over hundreds of years, Bitcoin has only been around since 2009 when it was created by an anonymous person or group using the pseudonym Satoshi Nakamoto. Now, when you hear the term altcoins, this refers to any cryptocurrency other than Bitcoin. These coins were created to improve on the Bitcoin concept or to serve a specific purpose within the crypto ecosystem. Popular examples include Ethereum, Ripple or XRP as you see it on screen, and Solana, as well as the other crypto CFDs available on the Plus500 platform that are on screen right now. XRP is the native crypto token of the Ripple network. Ripple is a payment settlement system and currency exchange network that can process transactions globally. Solana is a high-performance blockchain that is utilized for finance, payments, and gaming, to name a few things. Part of its main aim is to compete with centralized payment process systems like Visa, which I'm sure many of you that have had a credit or debit card have heard of. However, Solana's plan is to use decentralized blockchain technology to process global transactions quickly and easily. So let's discuss what CFD traders need to know about Bitcoin, XRP and Solana, amongst other cryptocurrencies. Number one, cryptocurrencies are highly volatile. Prices can swing dramatically within hours or even minutes, influenced by news, regulatory developments and market sentiment. This provides opportunities, but also provides risks for CFD traders, especially where leverage is being used. So I would suggest it could be worthwhile doing further research on the individual cryptocurrency that you would like to trade, and be aware that risk management is critical to protect your trading capital. To help you with this, I would suggest you consider using consider the use of a stop loss to limit potential losses and take profit orders to lock in gains. This order functionality is available to you on the Plus500 platform. Number two, The cryptocurrency market trades 24 hours per day, 7 days a week. Unlike traditional assets like the S&P 500 that are shut over the weekend, Bitcoin, XRP and Solana trade around the clock. This offers traders the flexibility to trade at any time, which can provide more opportunities, but it also means you need to be alert to the potential for instant reactions in the prices of these cryptocurrencies to news and events happening in real time. So when you have live open positions, monitoring the market is essential. Number three, the liquidity in the cryptocurrency markets is improving all the time. However, it isn't yet anywhere near the volumes traded in traditional established markets like the S&P 500 index or Eurodollar, for example. Bitcoin offers the best liquidity due to its position as market leader, which ensures it has a high trading volume on a daily basis, while those cryptocurrencies in the top 10 market capitalization list also have stable liquidity, but usually will experience bigger percentage moves than Bitcoin. So why has Bitcoin trading become more popular? Well, there are a few reasons. Media coverage, social media commentary, and educational resources have raised awareness about Bitcoin, what it is and what its aims are. And this has attracted a wider audience, including retail and institutional investors. Recognized companies like Tesla, PayPal, and Square have started to embrace Bitcoin, boosting its credibility. The introduction of numerous exchange-traded funds, or ETFs for short, and a number of big global banks throwing resources behind Bitcoin and crypto-related products has also helped. And that's helped institutional investors as well, including the hedge funds, to gain exposure to Bitcoin, and some of them are starting to add it to their portfolios. This has seen an increase in speculative interest, with many traders being drawn to the big up and down moves in price. And this brings us nicely onto looking at the performance of Bitcoin, XRP and Solana over 2024. So let's move to the Plus500 charts. So how did Bitcoin perform in 2024? If we look at the chart on screen right now, you can see it was a very strong year for the world's biggest cryptocurrency. Starting on January the 1st, where it opened the year around 42,000, Bitcoin briefly dipped to an early low at 38,446 on January the 24th, before pushing up to a high of 73,576 on March the 14th. After which it range traded between this high and a low at 49,500, which was hit on August the 6th. And that continued to range trade until early November. You can see this more clearly if I draw a trading channel on the Plus500 chart for you. You can do this by clicking on the pen icon on the top left of the screen, then clicking on the channel tool from the drop-down menu, picking the high from March the 14th and the low from August the 6th. As you can see, Bitcoin trading in a wide range before breaking out to the top side on November the 7th, from which it raced to a new all-time high at that time of 108,179 on December the 18th, at which point it was up a huge 156% on the year. It then eventually succumbed to some profit taking, falling back to close the year at 93,222, which was still a very healthy gain, yearly gain of around 120%. And I'll use technical analysis to discuss a little bit more of where Bitcoin could move next later in the webinar. Now, I'll discuss what drove these moves, just in case they could be relevant to future moves in 2025. This first push higher at the start of 2024 was down to three things: regulation, institutional adoption, and trader excitement around what is known as the Bitcoin halving. In early January, the US regulator known as the SEC gave approval for the first series of Bitcoin ETFs. This was significant as it was the first time that US regulators had approved these ETFs that invest directly into Bitcoin, broadening access for a wider range of retail and institutional investors, and allowing huge global funds like Fidelity and BlackRock to throw their considerable resources behind cryptocurrencies. Now, as a general rule, regulatory developments and government policies can have an impact on Bitcoin and the wider cryptocurrency market. Favorable regulations can boost investor confidence and encourage institutional participation and adoption, which can push prices higher, while uncertainty or restrictive regulations can lead to market volatility and can slow or stop further adoption of crypto into the mainstream of financial markets. And this can negatively impact prices. The next event was Bitcoin specific, and it's known as the halving. This happens every 4 years and is where the reward for mining Bitcoin is cut in half. Bitcoin miners are the ones who solve complex mathematical equations to validate transactions and ensure the security of the Bitcoin blockchain. This halving means Bitcoin mining companies like Marathon Digital Holdings, who are a CFD on the Plus500 platform, started to just receive 3.15 Bitcoins per successful mining operation, rather than the 6.25 Bitcoin they were receiving before the halving event. In theory, this reduces the supply of Bitcoin and potentially helps to push up the price if demand remains the same. Now, the next driver across the year was the macroeconomic backdrop. Bitcoin, like traditional stock, FX or commodity markets, is impacted by the broader economic environment, such as changes to interest rates or geopolitical events that impact general trader risk sentiment. Global stock markets rallied in 2024 against a backdrop of lower inflation, which ultimately led to global central banks like the Federal Reserve cutting interest rates to help maintain economic growth. As a general rule, lower interest rates support risk sentiment and can help to boost cryptocurrency prices, while higher interest rates can weaken risk sentiment and see cryptocurrency prices fall. Interest rates are likely to be an important factor again at the start of 2025. Now, finally, the break higher that you see at the start of November on the chart on screen was when Donald Trump was elected President of the United States. In the run-up to the election on November the 5th, Donald Trump had made a number of pro-Bitcoin speeches and introduced a number of pro-crypto campaign pledges. And these range from him vowing to make the United States the crypto capital of the world, creating a strategic US Bitcoin government Bitcoin reserve, and putting a halt on any future attempts to sell off any of the US government's Bitcoin holdings. It also included firing the head of the SEC, the country's current or was at that time, main crypto regulator, and looking to pursue a more crypto-friendly regulatory environment, including enacting laws to support the industry and foster its growth. Now, his resounding election win and the Republican clean sweep of the presidency and Congress, which is the lawmaking center of Washington, all came together to boost Bitcoin's price. And we can see that move on the chart. Once those highs at 73,576 were taken out in early November, it resulted in a quick jump up to 108,179 high on December the 18th. And this was when the Fed said that they would pause their interest rate cutting cycle, which helped to send Bitcoin back down to an eventual yearly close at 93,222. XRP and Solana also made very positive gains in 2024. XRP was the standout beneficiary of Donald Trump's election win. Ripple, the company behind XRP, have been involved in a 4-year-long lawsuit with the SEC. And when Donald Trump won the presidency and the SEC chairman of that time said he would resign, traders saw this as a huge positive for Ripple, and XRP saw huge gains. Looking at the chart, XRP jumped from 0.5386 on November the 7th to a high of 2.884 on December the 4th, which was a rally at that time of 435%, before closing the year after some profit taking back down at 205.94, which was a yearly gain of 282%. Solana followed a more similar price action to Bitcoin across 2024. It spiked from 176 on January the 1st to 207.99 in March, traded in a range between that high and a low at 109.16 in early August, before breaking out to new highs at 262.12 on November the 22nd, at which point it was up 160% on the year, before slipping back to close at 187.29, a yearly gain of 87%. The question is now, what next for Bitcoin, XRP and Solana at the start of 2025? With that in mind, let's look forward now and consider some of the potential areas for traders to focus on in early 2025 that could drive the direction of these cryptocurrencies. The first area to think about is the actions moving forward of Donald Trump and his policy team surrounding crypto. Now, Donald Trump took office as president on January the 20th, and since then he has made some interesting decisions to lay the foundations of his campaign promises. He picked a pro-crypto chairman, Paul Atkins, to lead the SEC, the main US regulator, and bullish crypto observers are hoping that he will usher in a new era of lighter touch regulation that will allow the market to flourish. However, it should be noted that the hopes for this to happen are high, so there is always room for potential disappointment. Now, the actions of the new SEC chairman once he takes office are especially important for the direction of XRP, who currently still have an appeal against them in that lawsuit from the regulator. This has created some renewed uncertainty at the start of January, and that's weighed on the price of XRP again since it hit its new all-time highs. Those who are bullish XRP are hoping that the new chairman might withdraw the appeal, putting an end to the 4-year-long lawsuit, while those who are bearish XRP are hoping he allows the appeal to progress, meaning further court battles await. The outcome of this case will not only have major implications for the direction of XRP, but also for sentiment towards the cryptocurrency market as a whole. Next, President Trump issued an executive order titled Strengthening American Leadership in Digital Financial Technology. Quite a mouthful. The aim of this order was to support the responsible use of digital assets, blockchain technology, and related technologies across all sectors of the economy. This executive order creates a working group that will advise the White House on digital asset policies and is tasked with submitting a report to the president within 6 months. This report should include recommendations for a regulatory framework and legislative proposals, and it will also include the potential creation and maintenance of a national digital asset stockpile, which is even more interesting as President Trump recently mentioned on social media that he thinks XRP and Solana could also be part of any stockpile alongside Bitcoin. Now, the working group is also to be chaired by Senator Loomis, who is pro-Bitcoin and has previously made her intentions towards the cryptocurrency and its role within the government known. Last year, she introduced the Bitcoin Act in late 2024, proposing the government acquire 1 million Bitcoin over 5 years with a mandatory holding period of 20 years. How this all develops could be extremely impactful for the direction of Bitcoin moving forward throughout the next 2 to 3 months and throughout the rest of the year. So, as we look forward, updates on these shifting regulatory and political landscapes, alongside the general macroeconomic backdrop regarding interest rates and inflation, as well as institutional flows in and out of these ETFs that I discussed earlier, will play a crucial role in influencing market sentiment towards Bitcoin, XRP, Solana, and other cryptocurrencies moving into February and March. Technical indicators are also important, and in previous webinars I've discussed support resistance, Bollinger Bands, and the MACD indicator, which can all support your trading decisions. And if you would like to watch these are available on the Plus500 YouTube channel. Today, though, I will just highlight Fibonacci retracements and extensions. I use these all the time to find meaningful levels for trade entry, stop losses, and take profit orders. I utilize Fibonacci retracements if I am trading a CFD that has been moving higher but then starts to fall, as they are really good for identifying some key levels for me to focus on that may hold any further selling and restart the move higher again. Likewise, if I'm trading a CFD that has been falling but then starts to bounce and move back higher, they are really useful for identifying those levels where that move may stop moving higher and the downtrend begin again. Now, when you're using Fibonacci retracements, there are 3 percentage points that you need to know. These are the 38.2, the 50%, and the 61.8%. In an upside move, we take the significant high and the significant low and the significant high, levels that stand out to us on the chart we're looking at, and run the Fibonacci retracements for that move. To do this on a daily chart of Bitcoin, I click on the pencil draw icon, top left, move the cursor down to the Fibonacci retracement icon, click on the significant low, for example, from November the 5th, move it up to the high from 109,024 on January the 21st. And as you can see, this provides me with some support levels if the market was to fall. These are 93,000 at that, which is the 38.2% retracement, 87,936, which is the 50% retracement, and 82,946, which is the 61.8% retracement to focus on. We would initially view this 38.2% retracement level as a support, the key support level, and possible area for buying to resume from. However, any break lower below this level can reflect signs of a more sustained fall, where we would look towards the 50% level as the next support, and if this was ultimately breached, onto the all-important 61.8% retracement. If we were to look at a downside move, such as the one from December 18th to December the 31st, for example, I would take the significant high from the December 18th and run the retracement to the significant low from the December 31st to get the 38.2, the 50%, and the 61.8 retracement levels that may act as resistance on any potential rally. As you can see from the chart, the 61.8% retracement provided a resistance point that managed to top out the price of Bitcoin for a couple of weeks before it was broken on January the 18th. Now, Fibonacci extensions are really useful to find potential resistance areas that may cap the price of a CFD when a market like Bitcoin is trading close to or constantly printing all-time highs. Now, to use Fibonacci extensions, I use the same Fibonacci retracement tool, but this time I first click on the current significant high, which is, as an example, 109.24 from January the 21st, and I move the retracement down to the significant low at 89,112 from January the 14th. This helpfully projects some potential resistance levels at 116,752, which is the 138.2% extension, and 121,561, which is the 161.8% extension point. As an example, if the market was to break to new highs, take profit levels could be placed ahead of these 138 and 161.8% retracement levels, extension levels, sorry, to lock in potential gains. Fibonacci retracements and extensions can be used over any time frame and can be combined with other technical analysis techniques to help you maximize your trading plan. So there's lots to consider for Bitcoin, Solana, and XRP moving forward, as well as the cryptocurrency market in general. Now, the great benefit of using CFDs that it provides you with the opportunity to sell as well as buy, and as and when these events and trends impact the current that we've discussed today, impact the cryptocurrency prices. And the Plus500 platform provides you with the risk management tools of stop loss orders, trailing stop loss orders, and take profit orders that are essential risk management tools in these volatile markets. Now, I can see there are lots of questions, so let's move on and answer some.